understand as possible. We start? Yeah, so I mean, when we announced our strategic plan about a month or two ago, the key theme was that two things from a definition perspective, that I wanted to define the group to be a consumer group rather than what it is today as a conglomerate, which is everything and anything, to kind of morph this into a consumer holding group per se, under which there would be 5 main verticals, within retail and food, which I guess if you look at it is very interchangeable. So we look at it as food and non-food. And the food retail is what Berjaya Food is today. The property under which there would be the property development, which would be redevelopment of the existing land bank, some of our existing investment properties. And we have said that we do want to do a bit more on affordable housing, not just purely from a social charitable aspect, but from a commercial perspective as well. And I'll talk about that later. And that would be done under a different brand, just so that we don't cannibalize the branding. And then under hospitality, a division that's gone through quite a lot of massive problems globally for everybody over the last 18 months. But we still like this segment. But what we do need to do here is to really define and ask ourselves which segment of hospitality we want to be in, and be very, very clear about that. I think if there's one thing that the pandemic has opened up, is that we can't be doing everything and anything, given that hospitality is not the only thing that we do. So we need to be very clear and focused on this, and I'll talk about that later. And then under services, as you know, gaming has always been the mainstay of the business from an income perspective. We do have a very successful and growing environment business, which is very highly profitable, which I would like to do a lot more. And then we've got a number of digital businesses, Razor, our data analytics company, and also our wallet company, Be Infinite. We've done an internal restructuring to kind of create Berjaya Digital, Be Digital as we call it, and to kind of put all these 3 digital companies under this Berjaya Digital. The reason of doing that is that I felt that these companies need to be ring fenced away. The kind of people that we hire, the business that we do is very different. And also from a future funding perspective, it's good to ring fence these companies away. So a number of these sort of internal cleanups have been done, where we have kind of we've been closing down dormant companies, kind of merging overlapping companies, creating this sort of holding company, just so that internally the structure is a lot more cleaner and tighter. Next. So we, this is something I showed to my colleagues when we announced this, and we kind of broke this down into different parts. I've always said that the vision of the group must be to be a consumer group, and we're not just a Malaysian operator. We do operate in about 16 countries globally, and we should set the bar high that we want to be a global consumer group, but with a caveat here that it needs to be very focused. And hence why we came out with those 5 verticals before that, that these are the 5 verticals we want to be in. And within that, we're also very particular about the sub-segments that we want to be in, so that just to make sure that demarcation is very clear. Vision, obviously, this is everybody in this call will know about this, is to really kind of unlock the business value. There's a lot of trapped value, especially in B-land. In order to do that, we do need to institutionalize and streamline the business, right? We can't be making investments based on gut instinct and that sort of thing. There needs to be a process, a structure, a bit of a streamlining, because we just have a bit too many, and also to kind of put processes in place. One of the big, problems in the past has been the lack of a performance monitoring and execution. So if you look at a deal pipeline, it is we are quite good in getting in going out and getting the deals. but we don't do a very good job in terms of what happens after that, in terms of the performance monitoring, the execution, setting ROIs and KPIs and all that sort of thing. So this has now been done under my office, and where we have a monthly excos where this is discussed now. In terms of approach, I've said that there is a need for us to restructure some of our operating model, so that we can do a bit more better here, and I'll get to that later, and also digital and data. Next. And again, the distinction is that at the B Corp level, we are an investment holding company. We don't run any businesses out of B Corp. And so that distinction must be made very clear. We do own several companies, and it is those companies that we regard as our operating entities. So it's very important to get the holding company structure right. And this is how I envision it, right? If you kind of put it in this very kind of house diagram. So at the top where the green is where B Corp sits, and that's kind of the roof of the house, right? And that's led by me and my senior management team. And then under that, we've got the operating entities, those 5 verticals, as I call it, each of which has their own CEO running it. And that is what I call the operating entities. So they are the ones who run the day-to-day aspect of the business. And then B Corp is very strategic at the top. And then what binds these 5 operating entities are, that we need to do a lot better is the profitability part. I think there's no surprise that from a revenue to profit, there is always a big mismatch for us. And that happens because of the impairments of various investments that we have made. I have a slide on that, which I'll show later. The governance aspect, I've said, our corporate structure is a bit convoluted. And also there's an element of cross holdings as well that we are untangling right now. The process as well, like I said, needs to be institutionalized and streamlined. So there's been a lot of reorganization that's been done. On the people part, I think my honest assessment is that we are operationally strong, strategically weak. So where you see the blue part at the top, retail, property, hospitality, services, there we are quite strong. The ability to run the business day to day, we're quite strong. We know what to do. But at the B Corp level, where the green part is, the being able to kind of put a very focused strategic thinking hat, that's where I think we've not been too good. And that's where a lot of these structures are being put in place. And I think, and we also need to do a lot more better in digital and data, simply because the number of consumer brands that we have, if we can integrate it from a data perspective, will be pretty powerful, because we would have a lot of insights towards how consumer behave, what the property that they're buying, the things that they're buying every day, what they're consuming food-wise and everything. So under that, you would see that there are operational and strategic roles. In light blue are all the operational roles. In dark blue is all the strategic roles. So one of the issues is that this 2 lines here, this light blue and dark blue at the bottom of this chart, often gets muddled. Sometimes it's done at the B Corp level, sometimes it's done at the operating company level. So over the last few months, we've made that demarcation absolutely clear. Anything which is day-to-day, payroll, hiring people and doing all that sort of thing is done operationally. At the B Corp level, it's all done strategically. So for example, things like HR and legal and everything is very strategic in nature. So I spent quite a bit of time internally in the first few months getting and articulating this, so that people understand. So next. So the current landscape of the group, this is how it looks like, right? So from a financial trend on the revenue, the 3-year CAGR has been declining about 4.5%. so that there needs to be a bit more focused strategy moving forward. And then sector contribution wise, the main contribution is so far retail and services, particularly gaming. Although gaming has been affected since since this current MCO has come in, which is about 3 months. You will see that in the numbers. I think no surprise there because we're not allowed to operate during this time. And hospitality last 18 months has been thoroughly very, very difficult for everybody. So in terms of revenue strategy, there is a need for us to have recurring income. And that's why I said in my last presentation when we announced the strategic plan, there needs to be a dividend policy for all the companies. It's something that that would probably be established a bit later, not immediately now, because there is a need to kind of conserve cash given that we don't know how long this pandemic is going to last. So there is a need for the companies to conserve a bit of cash to fund their operations. But once we're out of this pandemic, there will be a dividend policy that we will institute for all the companies, at least the profitable ones who are able to pay. So that will ensure that at the B Corp level, we get some sort of a base recurring income. And then we also get the other income from the sort of alpha generation by divestments of the assets and all that. Profit strategy, and the big reason between that mismatch that you see in the green and yellow chart there is that you've got a few companies that are profitable that cumulatively, because as a holding company it's all aggregated, that looks very nice, and then you've got some of the loss-making companies that bring down the profit. So that has been a recurring theme over the last few years with regards to some of the companies, and that is something that we need to stop. When I say stop, is either we divest those companies or we close it down. Next. So I broke it down to in four, right? Streamlining, improving, restructuring, and establishing. Streamlining are things that we already do that we need to just do a bit more tighter. And a lot of this is how we have grown various businesses over the years. For examples, when I say streamlining of sub-segments, is that if we are going to be in non-food, in consumer, what is it that we want to be in, right? Do we want to be focused on Malaysia for that particular product, or do we want to go all over the world, right? So we went into each of those businesses and clearly identified what they should be focusing on. An example of this is Causeway, who over the years decided to do this global domination plan, planting flags all over the place. And that's been a big source of a lot of the impairments over the years. So we've stemmed that by closing down all the overseas operations, the biggest one being China, which I have ordered for it to be closed down. And that is currently undergoing a process right now, and that will be completed by the end of the year. So for Causeway, they should be really focused on being a Malaysia operator. For our hotels, I think we, over the years overseas, we have found that, when it comes to owning hotels, having to deal with local authorities, regulations, land issues, we've had far greater success in developed countries, case in point in Japan, and also Iceland and those sort of places where we would want to focus on and divest out of emerging market countries, right? So places like China, Vietnam, it's not really worked out very well for us, but we would like to focus a bit more on developed markets. So on hospitality, quite clear, very developed market, and we want to look outside of Malaysia. And then on things like Causeway and consumer, which requires a lot of local expertise and know-how and everything, we want to focus on Malaysia. And then in terms of improve is what we already do, base level, we need to do better. Succession planning is very important. I said that as part of institutionalization, it should be really based on a system rather than an individual. I think, over the years, obviously the firm has been very, very reliant on Vincent to kind of make all sorts of decisions. And when I took over, then that fell on me. But slowly we've been kind of putting process in place where certain things are decided by the various divisions. And that's quite important from an accountability point of view as well, right? That everyone takes charge, but they're also accountable for those decisions. I put business empowerment there is that because I think that we've been working with the various entities to kind of see what are things that you can decide yourself and what really needs to come up to B Corp. And I find that over the last few months I've been here quite inconsistent. Some of the companies come to me for very important decisions, very strategic, which is great. But then some come to me for quite trivial reasons, which they shouldn't really be coming to me for. So it's a question of really kind of fixing that by putting in processes. Restructuring are things that we already do, but we do need to pivot completely given the landscape. I think the biggest example here would be hospitality. You know, we've been the owner and we've also been the operator. Owner is a bit like a real estate play, right? You're kind of owning it. But the value in hospitality really comes in how you run it. You can have a great property, but if you don't know how to run it, like you can't get the sort of average daily room rate. And I think an honest assessment is that we've not been very successful in the operating part. And that is something that we are speaking to external operators to come in and help us. So of our various properties, we have identified, I have a chart on that. We have identified some that we want to sell, phase 1, phase 2, and also some that we want to bring in an external operator. Because I think it's very important for us is that we just focus purely as an owner and let the established operators come and run it, so that takes away the whole management aspect of thinking about hiring people, doing your menu and pricing and all that sort of thing, right? Which is a completely different business altogether. In terms of establishing, I said that one of the things that we need to do is put in place a framework, right? And I've been very clear to the companies that I don't want to kind of dictate everything they do on a daily basis, but we need to kind of create a framework, kind of create a box with parameters so that they don't go off tangent, and create that sort of deliverable. So how they kind of navigate in that box, as long as they hit the deliverable, it's fine. But we need to be aware what they're doing on a monthly basis. Next. So over the next 2 to 5 years, and I gave 2 to 5 years is that because I think given the pandemic, there have been certain challenges which I'll discuss. I think there's potential for maybe about 5 or 6 companies within the group over a longer period of time as we go through some restructuring, divestment, streamlining, and everything. Potentially could go through an IPO process, and that could be potentially the ideal route for us to kind of realize some of the value via an IPO. And also, I guess it also helps in the larger scheme of things from a national perspective. Divestments, we have guided about 2 to 5 billion, and it's what we've been very consistent on over a 2 to 5 year period. So the first 2 years, which is from now until probably mid 23, about 2 billion, a large chunk of that to come from the divestment of the hotel assets. And then 3 years after that, perhaps another 3 billion or so from various divestments of other properties and companies as well. We've said that the target debt should be about 2.5 billion. That's the ideal. Our debt is currently consolidated, but I do feel that we do pay quite a bit in finance charges on a monthly basis, and that needs to reduce. This would go in tandem with the divestment. As we divest and get the gains, it will be used to kind of pare down the debt until we get to a kind of a comfortable level. Then we would we would be then able to, by which time, put a dividend policy and everything and stabilize things. I do want pure play entities. A big issue, I guess, in the past has been that what is B Corp, right? You own everything, and what is B Land? It's like a mini conglomerate within a conglomerate. So a lot of the internal cleanups that we're doing that is not seen on a daily basis is to kind of untangle that and make it into pure play entities. Next. So divestment plans over the next 2 to 5 years, with on retail, we've been closing down our overseas Causeway business. So this is the last of Causeway's outside of Malaysia business, and that should be a process that we should end by the end of the year. And then we've got small private companies that are not listed. We've got small printing company, and then the Borders book business as well. We've already given notice to kind of close that down. Again, not going to significantly move the needle, but I think it's an important step towards cleaning up the group and kind of creating that focus. And most importantly, as well, from a human capital perspective, it focuses the team on the right assets. Hospitality, it will be done in 2 phases. The first phase is currently ongoing. The 2 properties we have in Seychelles, one in Sri Lanka, and one in Vietnam, and also in Manila. So those 5 properties would be, we have currently put out a process to kind of find buyers. There's been decent amount of interest in all those properties, but the problem is that during a pandemic, it's not being converted to a close because people are hesitant about timing. If they were to take over right now, are they allowed to open and all that? So we've kept that conversation kind of warm. But I think that the key is when there is a bit of a light at the end of tunnel for the pandemic, before we can kind of close the deal. So that's the phase 1 of it, which would net us easily north of a billion, slightly around $1.5 billion for us. And then the second phase will be potentially the divestment of some of the local assets. Local hotels. The reason why we want to do that phase 2 is that it is very difficult to sell an asset, a hospitality asset in Malaysia right now. I think there's a lot more interest from buyers to buy something in Seychelles because the tourist destination, even in Vietnam, than it is in Malaysia. So we felt that we wanted to break the process up in 2 and kind of wait for Malaysia to sort itself out first, and then we'll be able to then sell Malaysia. The hotel assets on its own, if you look at it from an individual P&L, they're all profitable on its own right, because we've had it for a very long time. I think the question has always been is that the properties are a bit dated. So in order to get the average daily room rate up from here to here requires an investment. And that's when the conversation comes in, whether you want to spend that money kind of doing it yourself, or just selling it or bringing an operator. I think for those ones that we have identified, the first phase, those are countries that we feel that we don't really want to have a hospitality asset in. Motor distribution, it doesn't kind of fit into the grander scheme of those 5 verticals that we mentioned. About 2 months ago, we did announce that we are divesting our Peugeot. We have divested our Peugeot business, and that would be something that for some of our existing auto business that eventually we will sell. Once, and we are in discussions with some. Again, they are smallish in various ways, but again would focus the group on the right core assets. This will be excluding HR Owen. HR Owen obviously is luxury motor distribution. Our margins there are a lot more different. We are in a very niche market where the margins are typically a lot more higher than a commoditized motor distribution business like with your normal makes. Yeah. Gaming, I think the vision of the group has always, we do want to be a sustainable and ESG compliant company. It is a bit of a bugbear, in no rush to do so. We've had offers for this in the past. We just felt that the price was not right. So it is something that we would consider and entertain offers, but is it going to happen immediately? No. is it something that we do want to kind of work on to kind of make the group properly consumer without any sort of regulated business? Yes. And financial, we do have minority stake, 30% stake in Chinese and Berjaya Sompo. Our partners are well aware that, you know, at some point we will exit. We have indicated a desire to exit. And we're currently working out the technicalities of it. This could potentially maybe even go through an IPO route. But you know, we have to work it out with the partners. The issue here has always been the lack of ability to travel for us. Both those partners, Chinese in Taiwan and Sompo in Japan, want to see us face to face, and don't want to do deals, you know, over Zoom. So that again has kind of delayed a bit of this. Education, we do have 3, 2 in Malaysia, a hospitality college, a technical college, TVET college, and we have informatics in Singapore. The 2 colleges in Malaysia are already going through an advanced stage of a sale. So we've had various buyers. We've actually set up a process, data room, due diligence, and NDAs have been signed. So we expect this process to hopefully close by the end of the year. Again, this one is not going to be a huge check, but it will take a lot of cash resources out because it's been loss-making for a long time. It hires a number of people. So if somebody were to come in and buy, it takes away that burden off us. Informatics in Singapore is a listed entity with 3 main businesses. It's got Singapore operations, Hong Kong, and UK. We've closed the Singapore operations already. We shut it down about 3 months ago, and we are currently in the process of selling the UK and Hong Kong entities, and with a view to also selling the shell entity, the listed shell entity. Also, indicative timeline is end of the year. So end of the year, you should see education being out of the group, and that would be a big cash relief for the business. And then motor distribution, it's a fluid timing, you know, because it's very dependent on when, I guess, the economy opens up and everything. We do have a minority stake in the motor distribution business in Philippines, but Philippines is under a complete lockdown, so it's very difficult for us to kind of move this forward. So the moment we see economic activity moving back again, we would initiate this. Next. So legal entity rationalization, I think you'd all agree that B-Land is probably the most convoluted amongst the many that we have, right? So as it is, B Corp owns about 78% of B-Land, which then owns in underneath there, Sports Toto, which then owns Philippines, which then owns HR Owen, right? I've always said that I think we do need to make Land a pure play property entity, Toto a pure play gaming entity, you know, and Philippines a pure play Philippines entity. It's listed in there, and HR Owen has no reason to be there. You know, it should be somewhere else, which is better reflective. So on paper, we know how it should look like. You know, B Corp should kind of have, HR Owen should be really under B Corp. You know, property should be under a proper property company. But how you get there is the tricky part. It does require money, some corporate exercise. So we've been working on various permutations on that. So this will be an exercise that we will undertake. I'm just not privy to say what at this point in time, because we're working out various permutations as well, right? Because it does require money, and we need to be quite careful whether at this point in time, when we don't know what's going to happen by the end of the year, do we want to do it here, or do we want to kind of make sure that operations are running? So it's a delicate balancing act, but this will be something that we will address. Next. So in terms of establish, you know, all the execution is not if it's if people are not there. You know, I said that 2 things need to be established: management committee at the B Corp level, which has never been done, and then an exco at operating company level chaired by me. So this is how the management committee looks like. We know we've put this in operation already for a few months. It's a combination of existing people, new people, and internal people being promoted up. The ones in green are new people joining, and then the blues are new ones who have already joined, and then the black are existing people. So it's a nice balance. You don't come in and kind of get everyone new. You need that balance between the existing people as well. So we expect this whole thing to be completed in about 2 months from now. People will join, over the next 3 to 4 weeks, and then another one in about 2 months' time. And then Exco, which I chair monthly. This Exco is really to get a high-level understanding about operationally how they're doing, what are the pain points, what we need to be aware of, are the business plans on track or not, so that we're just really a bit more proactive rather than reactive. I think in the past, a lot of it has been a bit reactive. I know when I joined in March, we were at the kind of the last stretch of the financial year end, which is in June. So I had a good idea. I always say the first 3 months, I always observe and see, and I don't really do much decisions at that point in time. But it was quite apparent to me, a lot of it was a bit reactive towards the end of the year, right? And so we need to kind of fix that by making sure, we're 2-3 steps ahead of a lot of things. And this is the forum to do that. So it's a lot more organized now. We've sat down with the various business and kind of prioritize what needs to be done. And if this doesn't work, what are the levers that you activate to do next? So I mean, how would a future B Corp look like, right, after all these various kind of internal initiatives are done? I always say the internal initiatives are ongoing, right? Processes, internal propaganda of getting people in line with the vision, the whole rah-rah and everything. And then there's the external part where we divest companies, and that's a function of also timing. It's probably the worst timing right now. But this is how we envision it, right? A retail group which has food and non-food. An aspiration in the non-food would be to have a chain of stores, for example. The food is what Berjaya Food is today. Property is, I envision it to be a pure play property entity. Hospitality, I want to focus purely on 5-star hotels in the future. Why 5-star is that I think it's a bit more recession proof. It has always a recurring customer base that is coming through. And if you look at the hospitality industry, 5-star, 4-star, 3-star, anything below the 4, you're very susceptible to economic shocks, whereas 5-star is quite resilient. And we see that even in the transactions of hotels that are being done over the last 18 months to 2 years. 5-star has been quite resilient. They have holding power. There is a big recovery angle as well. So as we kind of divest our hotel properties in overseas and kind of get operators to run some of our other hotels, in the future, I would like us to just have 5-star hotels, like pretty much like what we have 4-star, 4 seasons in Kyoto, something along that line, and which eventually I would like to put under hospitality REIT, so that we have some sort of recurring income coming up. We've got the environment business. That would be something that I see potentially as us being able to list. It's in the right space. It's profitable, doing really well, organic growth. We've not really kind of acquired a lot of companies, and really run very, very well. That is something that I would like to list as well. Berjaya Digital is not going to be, we're not going to be a VC arm or anything, but I think it is an entity that will be there to kind of look at potential interesting things that are synergistic to the wider group. But we're not going to go crazy there, because I think there's way too much money in digital with the fund. So I think they can take those crazy risks. I don't really want to. Yeah. And so Yeah, so I'll end there. I'm happy to take questions. I know I didn't go deep down into each of those various businesses, but the key point here is that if we are in food, going through each of those verticals, right? In retail, we would purely focus as in Malaysia. I wouldn't envision us going and doing something retail in overseas, because it's a very localized business. We need to know regulations, and anything we do in retail needs to be scalable. It cannot be a single asset. It needs to be something that we can open 200-300 stores. In food as well, I think we're quite happy with the existing brands that we have. Could there be further streamlining of that? Maybe. But again, whatever that we look for would have to be scalable. It cannot be a single store kind of thing. Salah has done very well. It's our own brand that we would like to grow there. And then in hospitality, to focus purely on 5-star in developed countries. Property would be very local, again, because of the issues of land and knowledge and all that. And a lot of that would come from the existing land bank that we have in KL. And then in services would be to focus on things like environment and all this. Gaming is highly regulated, as most of you are aware. So that is something that within the group, if I have less regulated assets, I'm happier. So that's the focus. So I'll probably end here and take questions.
Thank you, Jalil, for the insightful presentation. So we will now open up the floor for Q&A. You can unmute yourself to ask your questions directly, or you can type your questions on the chat box. So we have also received some of your questions in advance, and we will endeavor to get Jalil to address them on the call as well. So maybe, yeah, go ahead, Alex. You had a question? So yeah, so let me open up for live questions first. Any questions on the line?
Jeff, yeah.
Jeff, hi. Yeah, go ahead.
Yeah. Thanks for the session. Jeff from JP Morgan. First question I have is, how should we think of each legal entity, the listed legal entity? Their responsibility lies towards the board, or there is a overlapping to you as well? And sorry, pardon my ignorance, but do you sit on the board of every single listed entity as well? This is the first question.
No, I don't sit on the board of every legal entity, and I don't really want to. Like I said, they meet me as part of the exco as like meeting a shareholder. So I don't dictate, what products they should be selling and everything. It's just so that we're aware what's happening within the business, and it's so that we're at the holding company level, we're a bit more proactive with what we need to do, because we do need to behave like investors as well, right? The way I envision it is that the future state of B Corp really needs to be, we need to be capital allocators. We need to know that when 1 ringgit comes in, how are we allocating that, right? Where does the dollar go? Currently, it's a bit about, who shouts the loudest, they get it kind of thing. So there needs to be a proper kind of ROI and those sort of discussions that will go on. We do have reps on the board. It's not me. We have V Corp reps on the board. And I've always emphasized that the board is accountable to all shareholders, not just us. And the other thing that I have voiced out to the various entities is that they must get rid of their cross-holding shares. As you know, a lot of the entities do cross-hold some of the sister company shares as well, and that is something that I said that you must rid of. So we don't, as a listed company, ultimately the decision is with the board. They don't have a reporting line to me per se. But they share the same premises as us in the office, so we do discuss on things quite extensively. The way I look at it, Jeff, if I'm still parenting companies 3 years from now, something's wrong. Yeah, and I don't want to parent the companies. Yeah, but there are probably some companies that need to be parented a bit. You know, and I always say that there are, if you use a corny medical terminology, you know, there's a inpatient, outpatient, and ICU, right? You know, then Causeway is a bit like an ICU that needs to kind of amputate certain things, and we're currently doing that. So that I am the chairman of the company, so that we can drive through certain things. But with the legal, with the listed legal entities, I'm not too worried about it. You know, Berjaya Food, for example, is the least of my concerns. Yeah. And I don't get involved in Toto as well, because the business is pretty much regulated. The government tells you exactly how you can grow, what you can grow, where you can walk, where you can open. There's not so much of a strategy that is needed at the Toto level. Even if you say, I want to grow my business by X amount, it's not really up to you, right? MOF have to say, I agree, but you know, it's sensitive lah, right? You know, MOF is not going to go out and open another 500 outlets. Yeah.
So with that, looks like you're more of a passive investor rather than an active one. How are we supposed to envision the change that, you know, that you talk? I mean, forget about the divestment and M&A, that part I get on the CF part. But when I look at it specifically on a company level, let's say Beeland, for example, yes, you set new targets, but if there were no change in management, the targets, I mean, the execution is still going to be the same, right? I mean, it's still the same old bunch of people. So how should we think about it rather than you are now in there, you set a very clear direction,
yeah.
And you are not on the board. You have some reps, but yeah, this is the part where I could not really get hold, because if I want to buy a capital allocator, the people that you're addressing in the public equity market, they are capital allocator itself. It's like double counting to a certain extent. And I would, to a certain extent, envision that you end up a bit more like Genting Berhad. You know, you have a board seat, you also, you know, then the capital goes back to B Corp and you reinvest the dividend and, you know, generate higher ROI. So this is something that I couldn't really get hold, you know, fully grasp hold, because yeah, on the business front, I just don't see where the improvement is going to come from. Thanks.
Yeah. So so if you look at Beeland, we own about 78 or 80% or so, and the free float there is pretty non-existent there. And that is something that, you know, we work very closely with them. Like I said, I think, you know, the most likely option there is to perhaps maybe take it off the market eventually, right? And that would enable us to kind of restructure everything, and be able to do things. Like, I don't need to do that at the B Food level. I'm quite happy with what they're doing and everything. But at the B land is something that, and that's why I showed that chart in particular, because amongst all the entities, that is the entity that I feel needs a lot of work, that needs to go in. Where we do feel that we need to put in a bit more board representation, we do put. Like, for example, this is small, but, you know, we have a stake in Razer FinTech, and we've been quite not happy with the direction that they have taken, right? You know, initially when we invested, it was supposed to be a digital bank there in Singapore, which they didn't obtain. Supposed to be a digital bank in Malaysia, didn't obtain. And that's when we had to have a serious discussion, right? You know, what the heck are you guys doing? And I've gone on the board now to kind of push that forward. So I guess it's a bit selective, right? You know, if I'm on every board also, it doesn't read, I'm not very efficient. So we've been re-looking at the board and changing people around. It may not necessarily be me, but where I think it's necessary for me to be on the board, I am on the board. But B-Land we will address one way or another. I think we do need to address the free float issue by end of September. Yeah. So it's a it's a balancing act, lah. Obviously, you have to respect the boundaries of a listed entity, right? You have to run it like a listed entity with its own board and everything, and that's where the discussions are, I guess, in a way, passive, but also like a shareholder who's active, right? Without being very private equity like that. Yeah.
Maybe one last question before I pass
Yeah,
back
go
the
ahead.
time. So as a minority of B Corp, I'm glad you're drinking Starbucks.
Yeah, I have to support the brand, right? Yeah.
You're committed now. Anyway, as a minority of B Corp, what should I expect from all this corporate exercise? Is it
Yeah.
a redeployment of capital in a more efficient manner, meaning you're going to get a better bang of the buck, or
Yeah.
it's a return of capital? I should think a bit more of a better payout ratio or one-off special dividend. What ultimately what's going to happen to the minority?
Yeah, so I think as a minority, you should look at it in perhaps more short, medium term, and then longer term, right? And I guess because of the situation we're in, but the short to medium term would be that, I think the focus would be on profitability, is to get the company overall back to profitability. And then longer term is when you can expect that to continue, but with an element of the dividend payout coming as well, right? Because like I said, I think the dividend payout cannot be done overnight, given that a lot of the companies need to conserve cash and everything. So I would say that, shorter term would be profitability, getting that back up, cutting all the unprofitable companies and addressing that. And longer term, it'll be the payout. But the other softer aspect is that cross holdings, RPTs, and all that, we've put a stop to that, at least until since I joined, right? None of that has happened. I know we've really tightened that. It has to be approved by me, all these sort of things. Better disclosure, governance, and all that, right? And most importantly as well, I have shares in the company, right? So I'm a minority shareholder as well. So I'm not going to do something that's going to affect my own wealth. Yeah.
All right, thanks. Back to you, Steph.
Yeah.
Thanks for the question, Jeff. There's a question here I have on the chat box, Joseph from UBS. What is the impact of Razorpay's exit to Berjaya Corp?
Minimal, is very immaterial. So Razorpay is the wallet, right? It's always been the kind of the poorer business to the. So if you look at Razor FinTech, when it first started off, as the name suggested, it was supposed to do everything financial technology, and one of it was the dream was to kind of have digital banking as well, and that kind of never worked out. Obviously, for various reasons, in Singapore, the requirement for paid up capital for digital bank was 1.5 billion Sing, which kind of pushed quite a number of people out of the equation, including the likes of Revolut and everyone else. So we pulled out of it. And then in Malaysia as well, because the regulations insisted that we needed to tie up with a licensed and regulated operator, that also kind of changed the equation for us. But in that meantime, what they have done is the payment gateway, which is, when you pay something online, you would see that it's powered by Razor, whatever. So that has been the part of the business that has done very, very well. The gross transaction value there is about 40 billion. So that's continuing doing quite well. Whereas the wallet business, there is a need for you to spend a lot of money to acquire the customers, right? It's a bit like, Grab started off doing taxi, and then after that, they had to kind of pay a lot of people incentives, right? And that's a very, very expensive business. So it was our view that they needed to kind of focus on the part of the business which was growing, which was the payment gateway. So it is immaterial to B Corp it's immaterial to B Corp. So, but we want Razor to be a lot more focused on the payment gateway.
Yeah. Okay. Great. There was also another question here. It says you mentioned that about divestment plans that you have for Berjaya Corp towards
Yeah.
becoming a Sharia and ESG compliant business. So what is your view on the current ESG drive currently observed globally, including locally, and do you agree that corporates who do not embrace ESG practices will be left behind?
Yeah, I do. I have strong views on this, right? I think this, when you look at ESG, this is either you sign the UNPRI and kind of go through that kind of religiously, or you kind of define your own ESG guidelines. I'm more of the latter than the former, because I feel that every company is at a different stage of their ESG development, and they should be able to kind of craft that out and articulate that well. So one thing that I've said is that a lot of our companies are already doing a lot of work on ESG. Either we don't articulate it very well, or we don't kind of consolidate it there. So when it comes to ESG for us, is what it'll be more of a framework, a consolidation, what our various companies are doing. Is it something that we must do? Yes, I said, just like digital embracement, it's probably a nice to have several years ago, but it's a must have today. And banks are increasingly asking us these questions as well, right? Our JV partners are asking us, what are you doing towards ESG and everything? So, it's the same. Like many of you here would have some sort of firm would have some ESG policies in place as well for you to be asking companies. So it is something that we must do. But I want to do it properly, and I want everyone to embrace it and not just be a box ticking exercise. Hence why there's been a bit of a drive to do that properly.
Okay, thanks, Jalil. Another question, could you elaborate more on Enviro Park?
Yeah, so Enviro Park is does mainly anything within the environment services sphere. So it mainly does landfill. We have a 7,000 acre landfill in Bukit Taga here. We also run I think it's about 700 acres in Pampanga for over 25 years in Philippines. And then we also do the kind of waste management, river cleaning, and all that sort of thing. So anything environment related. So it is not it is not collecting your rubbish from your house on the lorries, and that's done by other people like Alam Flora and everything. But it's what happens after that. The trucks coming into the landfill and then dropping the waste. From there we take on. It's something that we've been extremely excited about. Very well run. Internationally, it's one of the companies that we have that I'm confident that if we were to go and bid internationally for projects, we will win purely on merit and operational efficiency and all that. So that is something that we want to grow. It's profitable, and it's self-sustaining as a business, which is very important, which was one of the briefs I given to all the businesses, is that you have to be profitable from your own P&L standpoint on a standalone, and secondly, don't come back to me for money. All right, so if you can, if this two is achieved, then it's quite good. You're the least of my worries. But if you're coming and asking me for money, then we need to have a separate conversation.
Thank you, Jalil. Another question here from BIMB. With your divestment plan on Sports Toto, when do you expect the status to be Sharia compliant?
Well, getting Toto out is one. That's a timing that I have no control over. But then, just because of that doesn't mean it becomes Sharia compliant, right? Then there's other, calculations and all that, which is why I said that the debt needs to go down, right? So if your basic calculation to be a Sharia compliant is that, your net debt shouldn't be kind of more than 33% of your total assets. So which is why the debt will come down. As we make our divestments, we'll use that to pare down debt, and then eventually kind of move it to a much more ESG kind of company. Because sometimes it's a very difficult conversation to have, right? We on one side we're doing this, and people say, oh, but you got gaming, right? Which is a fair point. But I think more beyond that is also the concern is that how gaming as an industry from a regulation aspect is going. As you know, our biggest competitors here in the country are unlicensed operators. So it's not a level playing field. We pay taxes. The three legal operators in the country, ourselves, Magnum and Dharmachai, pay nearly $1.5 billion in taxes to the government. So each of us pay nearly $500 million in taxes. Then you've got about 7 illegal operators, as we know it, who don't pay any taxes, who can do online. We can't do online, right? So when you kind of weigh this out and say, where is this going in the next 5 to 10 years, you need to make a clever, pragmatic business call. Yeah, and that's what led to the whole idea that we can possibly think about letting this go. Yeah.
Okay. Before I move on to the chat box, any questions live from the audience here?
Hi, Jalil. Sulin here. Hi.
Sulin.
Hi. Okay. Just 2 questions from me. Yeah. On the consumer front, when you mentioned about the restructuring, I know you've not talked about 7-Eleven, but you still have a very small minority stake. Is there any chance that this could be brought into the whole structure of things? And my second question, just answer this person.
If you ask me, yes, it's something that if you look at what is in B Corp and what's outside of B Corp, which is kind of sister company, right, owned by Vincent, that for me personally is the most interesting business. It'll be great if we can, but it is a listed entity, so we need to go through the proper process and everything. So it's do I discount the possibility? No, but is it a slam dunk? Also not yes. I can't say yes, right? Because one, it involves money, it involves other shareholders as well. It is also a listed entity. It's a lot more easier to do it when it's private. Yeah.
Right. Okay. And the other one is on the B land, right? So you mentioned just now also the consolidation of the property assets, hotels, and everything else. In terms of the process and the timeline for that, because early on you mentioned that apart from selling up some of the hotels, there are also some land that you could divest or you could make some money out of that. Perhaps just give us some color on the timeline for that.
Yeah, so hotels, the first phase, right? The Seychelles, we have 2 in Seychelles and we've got 1 in Sri Lanka, 1 in Vietnam, and 1 in Philippines. That is something I envision to be a 12-month process from now. So middle of next year is something that I would expect for us to complete that, assuming that we're still not in a 12-month lockdown. I'm basing that on the assumption that maybe by early next year, things will get a bit better from a movement restriction point of view. And then comes the second phase, which is perhaps Langkawi and the Malaysian assets. In terms of land, it's currently, because of the poor, I guess, situation around us, we've not really launched anything. We've been really kind of using that to kind of get the necessary approvals from the authorities like DBKL and everything. I would think that we would be in a position to do something by maybe first quarter of next year, early, to maybe launch some of the stuff on the prime land. So to start the process by first quarter of next year, because I think, to be fair, this year is a write-off. I think when it comes to property or anything, it's just very, very difficult for us to push something, especially the land that we have. You would need to kind of, it's a bit more premium price, right? So it'd be a bit hard pressed to push this this year. Yeah.
Right. And maybe the last one's on the affordable housing. With the land that you have, is there any portion that you can just carve out for affordable housing, or is it something completely separate?
Completely separate. I mean, as you know, all developers need to build affordable housing on their existing land, right? And everyone has skirted around that rule by either paying fines or delaying it inevitably and everything. And we want to be quite responsible on it. But I think in affordable housing, we've been talking to the various state governments, right? And our view on affordable housing is that it needs to not be too far away from town. Otherwise, it's not going to be affordable anymore, right? There's no point selling a 200,000 ringgit property 2 hours away from town, because then the person will be spending hundreds of ringgit commuting into work. But in order for us to build it closer to town, it would require us to kind of work with the state government. So we are in discussions with one particular state government that we have already is rather finalized. So I think affordable housing, the strategy there would be that it will be a JV structure, right? You know, the government, state government owns the land, we will build it, then we will share the small profit. We will share the small profit, but it'll be a volume game. Although the margin will be small, we're talking about potentially about 10, 15,000 units kind of thing. So it will add up. Yeah.
Right.
But it is not, it won't be us going out and acquiring land to build affordable housing, because then the economics don't make sense anymore.
Right.
Yeah.
Okay. And last one on the gaming. Since you mentioned that eventually it will be divested, does this include the ones that you hold in Philippines?
So Philippines is under Philippines is quite small in the grand scheme of things, right? And Philippines is a 5-year contract. We just got 5-year renewal. In fact, just today I got the message that we will get the letter. But in Philippines, like many of the countries, there's a bit of a nationalistic stance towards it. You know, we've had the business there for a good number of years with not so much of problem. But this particular renewal that we've had a number of problems. You know, because I think a lot of locals have been kind of having a push, you know, kind of saying why you're giving it to a foreigner and everything. So we have kind of crossed that line, and we have it for the next 5 years. Question is, do we want it lah? Do we want to continue it within the next beyond that 5 years, right? My inkling is probably no, because you know it's been quite difficult from a regulation perspective. Yeah. But what we have now for the next 5 years, we would keep it. We would run it. Yeah, there it's not a hard asset business. It's a management contract business. So the assets are owned by the government. They pay us a fee to run it on their behalf. Yeah.
Okay, thanks. One last one maybe from me. Yeah. So for at this point in time, it looks as if BToto is actually the funder to your whole set of operations, if I may put it that way. And when you talk about potential divestment of BToto, would it basically mean that it will only happen once all your other entities and the structure can stand on their own 2 feet?
Yes. Yes. Yeah, it has to be. It has to be pragmatic, right? Because you know, currently what Toto gives us is a nice dividend coming in, right? Of course, if you look at the trend, it's been declining because of the industry and everything, but it's still a good dividend contributor. But you know, we want that sort of kind of dividend discipline to come from all angles for us, to then say it's okay for us to kind of let this go. So it will be a gradual process. Yeah, it'll be a gradual process. But you know, I'm always hard pressed to put a timing on this, because you know, it's a gaming business. You're not going to have 300 people coming rushing through the door and saying, "Great, you know, I'm going to write you a check," right? Yeah. So it will be. There are people who want to buy it, but you know, we also need to. Yeah, I've always been very clear that we're not going to do fire sale just because we're divesting. You know, a lot of people do approach us because they know we're selling these assets and then kind of offer something 20% lower than what we have in mind. We said, no, we can't, right? Yeah.
All right. Thanks, Jalil.
Yeah.
Thanks, Celine. Thanks for the question. There's a question here on the chat box. I can see your well-planned strategies to revitalize your company. What are your main challenges to materialize your plan?
It's always execution, right? Execution is always execution, and okay. So one would be which is why we had to put in all these sort of processes in place, right? You know, where we have regular conversations with the companies to kind of understand where they are, what are potential surprises that could emerge everywhere, and we address all that. So it's really execution. Secondly is the timing. The timing is something that I have in mind, a timing, but it could also be derailed because of the pandemic. A lot of things are on standstill. Like buyers who are interested in the assets don't want to really commit and pull the trigger until they know. And given that a number of things that we do want to sell are in the hospitality space, so it is very dependent on a global recovery of sorts. So that is something that that could potentially be a risk that pushes things back. Yeah, so that for me is the biggest risk, right? I think I always say that the restructuring of the company, doing all the internal stuff is probably the easier one to do, right? But being able to kind of put a finger and say I'll be selling A at this time at this likely price, that's the more difficult part. Yeah, we've at least on hospitality think that at least domestically, end of the year things should start recovering, all right, and internationally middle of next year. So that's what we think. Although internationally in some of our assets it's recovered much faster. Iceland has gone from 0 to 85% occupancy within the last 1 month, mainly coming from European and US travels, but it's not the same case in other places.
Okay, thank you. Another question. How much untapped synergy do you believe exists between your operating units? And what's the ideal revenue contribution mix to Berjaya Corp should this be actualized?
There are a number of synergies, more from an operating perspective, right? I think there are overlaps in terms of things like, from a shared services perspective, a lot of synergies. From a legal services, finance, HR, and all that sort of thing. From a business perspective, I think there are synergies in terms of real estate and some of our outlets and all that sort of thing. I say synergy is more for us to kind of be much more efficient doing the business. I think maybe we've taken in the past, before I joined, we've probably taken maybe some of the synergy thing a bit too far. We want to keep everything in-house. When we want to keep everything in-house, we end up doing everything. We end up doing like payroll processing for all the companies. And I'm thinking, do we really need to do very manual payroll processing for everybody, or can we just outsource that, right? So it's a balance. But where I think it's quite powerful from a synergy perspective is the data that we sit on, right? We do have a lot of good data on how people consume, what they're buying, age profile, where, and everything. And we've never really kind of delved deeper into that to see how we can make better decisions. So for me, that would be an interesting angle to look at, which we're currently doing.
A question here from Afin Huang. Would you consider a shares distribution route to divest B Toto, or are you looking to cash in only?
All options are available. I think, like I said, I think we've looked at it. We've looked at that various possibilities, but we haven't made a decision yet. So I think anything is possible, but it needs to be the right time, like I said. If the question we need to ask is that if we do it now, are we in a good position, or can this be done a bit later? But then also comes the question, if you do it later, does the industry dynamics deteriorate even further from a regulatory perspective, right? So that's we've got various permutations on this, but we're not limiting our options here.
Thanks. Question here in the chat box. What are your plans for Inter-Pacific Securities? Is Berjaya Corp planning to dispose of it within the next 5 to 10 years?
So it's been one of the beneficiaries of the pandemic. It's made actually a very, very sharp increase and done quite well. So I think in that sense, is it a priority right now? No. Longer term, it is regulated. It is in an industry which is getting increasingly disrupted. So do I see ourselves having this in the next 5 years? Probably no. But is it something that I want to spend my time focusing on right now? No, because it makes money, it's self-sufficient, it's quite efficient. We'll deal with that later. Yeah.
Okay.
Steph, can I ask a question?
Yeah, go ahead.
Yeah.
Jeff.
Hey, Jalil.
Yeah.
Maybe the first question is, what do you think is the ideal remuneration for the entire B Corp? Or you can take a remuneration or cost, but ultimately, what do you think the appropriate SG&A should be for B Corp in your view, in your target?
For B Corp, is it?
Yeah. And
Do
following
we
on,
have? Yeah.
sorry, just following on to that question is, what sort of milestone or criteria that needs to be met for us to think about this is the base case, this is the bull case, and that's the bear case? How should we think about it?
Okay. I think, like I said, I think over the next 1 year, you should see some sort of divestments coming. I think cost is we've slashed costs by about 2 million a month now. And I think this month onwards, it'll be about 3 million that we would slash. And I think a lot of this is a pandemic issue, because I think a lot of people have been idle, and I think we've managed to kind of do that. But our operating costs, if you look at this current financial year that we're in, would reduce quite drastically. But I said that I don't think it's too much of a cost issue. I think it's been too much of a management issue in terms of the companies that we have, which drags everything down. So we've had this dollar that we just kind of like spend here, and there's no ROI there. And then it gets lost. We write it down, brings down the profitability. So what we've been doing is kind of putting all those KPIs, which we will share once we have on some base deliverables. So we're still working on what you asked, which probably in a few weeks' time we would be able to share. What are some of the hurdles that we should be aiming for, that you would know that, okay, you've hit the target, or you've not. Obviously, that is the more of the operating matrix, but also on the business part, like I said, this financial year, we definitely need to raise about $1 billion from at least the hospitality assets. Yeah. But the operating efficiency in terms of your numbers and everything, that's something that we're working on to kind of we'll disclose it soon.
How many headcounts do you have right now in B Corp, if I may ask?
Just B Corp or at the group, or the entire group?
Just B Corp. B
Corp, not much. It's actually probably about 120. Okay. Can be reduced. If you look at it, like of the 100, and I think it's about 125, isn't it? Of the 100 over 25, 40 of them are HR. 40, all right? Of the 40, I think about 32 also do very manual kind of payroll processing kind of stuff, right? So all that are things that can be done. One of the things that I say, of course, I've not said this internally, upset a lot of people. Sure. But there will be a right sizing exercise that we will do. Okay. Once we have the new head in place, the brief I've given him is to kind of relook at the entire structure of the group and say, what are things that we really need to keep internally, and what can we outsource? Because I don't want to outsource everything to the point that we kind of lose sense of how to do things. But there's really a number of things that can be outsourced, and I reckon that is 150 headcount that can be shaved off fairly immediately.
Okay, so we just continue on that. Can you just share the remaining 80? What roles or what functions do they play in the company?
So yeah, so they like the finance team, they would be consolidating the finance, right? Okay. So they would be working with the various companies, and they consolidate quarterly and do that. Again, that team is fairly manual. We've got a lot of people there whose job is just consolidating. Is there a way that those things can be automated? Like and it kind of flashes in the dashboard, yes, it can be done. I find that my financing is not strategic. They are a bit more operational, right? So if, for example, I were to ask that question on what is our cost, they can give me a number. But if I ask how do we cut costs, they wouldn't know because they're not strategic in that sense. They're mainly aggregators, right? So that needs to change, right? We've got a lot of people who's there compiling stuff. We've got probably about 7 or 8 people in the legal team. They're quite strategic, they do a lot of our agreements and everything. Then we've got probably less than 10 people in things like treasury and corporate finance, looking at deals and everything. I would say the bulk of the people at the B Corp level are doing very operational, day-to-day, mundane stuff, which can be, and that's why I showed that kind of the house and the pyramid and the need for B Corp to be very strategic. And I reckon that is probably about 40, 50 people at best.
Yeah. It does
and
feel
a lot of
very bloated for a holding company.
It is. But because also of the lack of demarcation between what is a strategic and what is an operational role, right? That they do a lot of work for a lot of the holding companies. My view has been that you should do it yourself, right? You should do it yourself, especially if it's day-to-day stuff, right? Payroll and all that. And because of that, there is also the way it's run is also a bit of a top-down approach because you kind of control, right? And it's top-down approach. So in order to kind of make them a bit more accountable for their own decisions, you need to kind of change the way the decision making is done, right? And we've done that for several companies already. I've pushed down a lot of the operational roles last month and this month onwards, especially with regards to HR, and the next exercise will come from finance and everything. Yeah.
All right. One last question from me is, I know you made it public through the media that the Tan family is a little bit hands off. I just want to dive a little bit deeper. Is that agreement verbal or contractual? And we know the Tan family is quite big.
Yeah. So I think to be fair, I guess the only one who has always made the decision has been Vincent, right? He's always been the ultimate decision maker. When I took on this job, I said that I must have full control. Of course, I will on strategic matters, what we need to sell and everything is a conversation I have with Vincent often. But when it comes to operational, people I want to bring in, people that need to go and all that is my decision. And I've been here for nearly 6 months. That's been respected. Is that in writing? No, it's not. It's verbal. And when I joined, I did say that there shouldn't be any executives, like executive chairman, executive deputy chairman, and that has been respected. Robin has stepped away into a non-executive role, so has Vincent. And then that's on the Vincent side. Then, of course, the children, the two who are in B Corp per se is Robin, by virtue of his role on the board, and Nareen, who runs Toto, who's also on the board of B Corp. They have been very supportive, so I don't get involved in the day-to-day of Toto because there's not much to be involved there. But there's never been an issue so far where they have come and said you shouldn't do this, right? They've been completely hands off, and whatever that I need to discuss, I take it to the board. So it's we don't go to the board for everything. We went to the board for the whole framework, and we say that these are companies that we will or sectors that we don't want to be in. And that's an agreement that's been in place. Beyond Nareen and Robin, all the other kids are not in the listed entities. They are in the private companies. So Yuming runs 7-Eleven, which is out of the group. And then all the other kids have their own businesses as well. Vincent has been quite firm that the kids shouldn't be in an executive position within B Corp. So Chris, for example, is on the board of B Land and B Food as the shareholder rep, because there's no other Tan family representation there. Robin is not on the board, Marine is not on the board, Vincent is not on the board. Yeah, so I think the agreement has been that Vincent would eventually step away from the board, over a 2 to 3 year period. Yeah. So
Thanks,
there is no, I guess, we don't have aunties, uncles, cousins, nieces. It's not that convoluted. And I think the good thing about Vincent is that he's recognized that, it shouldn't go that way, right? So the children are in the private side of the business. Yeah.
Right. Thanks. Look forward to meeting you soon.
Thanks, Jeff.
Thanks, Jeff. I've got a question here. You mentioned that a lot of your restructuring plans are in the longer term, so I think 2 to 5 years and things like that. What are some of your nearer term plans?
Yeah, nearer term plans are things that you probably won't see, right? They're more operational efficiency kind of things, right? Like what I discussed, it's kind of right sizing the group, reducing the operating costs on a progressive basis. Those are the operational improvements that will come in. And these are things that people won't see, but people definitely feel it internally. They may not necessarily like it. But those are things that we're doing in the short term. And these are continuous things that we need to constantly do, right? Put in place proper frameworks, stop checks, governance, challenge certain decisions and those sort of things. Yeah. The things that you see publicly are a lot of the divestments, but behind the scenes, there's a lot of those work that's already ongoing. Yeah.
Okay. It's almost 12:25 now, so we are running over. A lot of interest in the group. Is there any other live questions on the call? Or one last question? Okay, if not, we would like, thank you everyone for joining this call, and thank you, Jalil, as well, for your insightful presentation and answers to the questions as well. So the recording of this presentation and slides will actually be on our Bursa Institutional Insights portal for any one of you or your colleagues that might have missed it. If there are further questions, of course, feel free to reach out to Jalil and his team, or you could reach out to me and my team as well, and we can forward them over to Jalil and his team.
Yeah.
So thank you again, Jalil. Is there any last words that you have before we end?
No, like I said, I think one of the things that I want to do is increase the investor interactions. And I'm accessible. Obviously, my team will help organize something, but most of you know me and know how to contact, so feel free to do so. We do plan to do this on a more recurring basis, at least every quarter, to do something a bit more formal after our announcement of our results, to keep people informed, to be able to kind of track the progress. But in the meantime, in between those, we're happy to engage with investors individually as well. So please let us know.
All right. Thank you, everyone, once again for joining the call. Thank you. Stay safe. Bye.
Thanks.
Bye.
Thank you. Bye.
Bye.